Meantime, Apple getting a rare downgrade from Needham today. The firm changing its rating from buy to hold on weak fundamentals. They're also talking about rising competitive threats and an expensive valuation, saying it'll take a lot to make this stock work right now. For more here, let's bring in the analyst behind the call, Needham's Laura Martin. Anita, this is really the call heard around the street today. It's great to have you here. What does it tell you that there's so much attention on this downgrade?
You know, I think it tells you that Apple has a best-in-class brand and that it's intriguing when people are negative on this name because it's such a high-quality American brand.
Right. And look, Berkshire, they've done so well with it, although even they, I think, have paired the position. So we've seen the shares underperform. They've, skidded of late. You highlight a few reasons why, kind of the fundamental change in narrative that you're looking for, where you think if the stock starts to work again. What are those things that need to happen?
Well, I think there's urgent risks and important risks to this name. And also there's some things that would make us much more positive, like advertising, which you brought up. But let's go to the urgent risks. Urgent risks are super highly valued. 26% times forward earnings on a consensus. Our earnings are below that on a PE basis, but that's twice its historical trading PE, and it's a nice big premium to the average S&P PE, and it's traded at a premium to some of its big tech competitors, and they're growing 2 to 3 times faster. So we don't get that. We prefer Google and Amazon to this name. On relative valuation. Second, lots of fines. There's a lot of threats to its fundamentals. We take numbers down just on China iPhone threats. And in that we're about 1 or 2% below on both earnings and revenue growth. But, anything that hurts that iPhone installed base replacement is problematic because really this is a company that everything falls out of the iPhone. Not only is it 50% of sales, but services revenue, which drives margins, come because you have iPhone sales. So China being weak sort of structurally on the demand side is problematic for us. And then the important problem is competition. We are really intrigued by the fact that longtime Apple designer Johnny Ive has joined forces with Sam Altman's OpenAI to create sort of the smartphone killer. Ive has said he wants to move away from screens, that there are a lot of negative unintended consequences when he invented the smartphone screen. So I'm really intrigued by that. He said his new hardware will be out in mid next year. Of course, Meta and Google are working on glasses to replace the smartphone.
But so is this a tariff story or had nothing to do with tariffs, really?
So not really. I mean, tariffs are a cost. And so we think that the risk on the China tariffs, where 85% of iPhones are made, is about $1 a share to the EPS line. But on the revenue side, no, it's more about consumer demand in China. It has gone from 19% of revenue to 17% last year. We're saying it's going to go to 16% this year. And that alone is enough to bring us below consensus estimates.
Okay, so I thought it was interesting as well. You say, look, maybe they need to pursue an advertising revenue stream here. And it worked out so well, obviously, for some of the other stocks that you are recommending. Would they? Should they? How would that work exactly?
Oh my gosh, it'd be so amazing. So it would make us more positive on Apple if they did something at WWDC next week or in September that convinced us there was going to be an iPhone replacement cycle. So far, no good. The other thing would be if they reversed their long-held position on privacy rights and actually added ads, because we have best-in-class first-party data here with the wealthiest consumers on Earth, like 1.2 billion of the wealthiest consumers on Earth. So they would put ads on their homepage. They can do it as a watermark. They can do it as a banner ad. I mean, they have the home screen. If you think about the home screen on your Roku or the home screen on your Samsung, take that on steroids, because 5 hours a day is the average time spent on an iPhone.
Laura,
so
I was with you on the Netflix. Okay, they want to introduce a few ads here and there. You convinced me, and you convinced them, and they ultimately did it. Come on, I don't want my iPhone cluttered with advertising. It's like the one haven that I have from all of this garbage.
No problem. Let me just push on this. What if I took your iPhone price in half and said, but over the period of your iPhone, you have to take ads?
Right. That's what Netflix did. Yep.
That's exactly what Netflix did. Give the consumer choice. Some consumers find a $1,200 price point for an iPhone high. So let them have a discount if they take ads for the perpetuity of owning that iPhone.